Okay, today we are going to talk about chapter 3, which is stockholders' equity. And in this chapter, we are going to talk about the sale and purchase of stocks, dividends, and dividend payments. So I have selected this question from your textbook. It talks about White Comfort Specialist reported the following stockholder equity on his balance sheet as of June 30th, 2024. Just to remind that we have a balance sheet equation, asset is equal to liability plus equity. And now we are talking about everything that falls in this part of the balance sheet. All right. So that's why this stockholders equity that has been given to you, it's coming from here of this balance sheet. Okay. There is no asset and there are no liabilities. Everything is stockholders equity. So in this scenario, this stockholders equity talks about that preferred stock. So they have two kinds of stock, preferred stock and common stock. The preferred stock is a 7% par value and 625,000 shares authorized. So we know that there are authorized shares, means the shares authorized by the state of Secretary of State for a corporation to issue 280,000 shares issued and outstanding, which means the 280,000 shares are in the hands of the shareholders. 625,000 what authorized, but the company or the firm has sold only 280,000. That means the firm can sell another 345,000 shares that they have not sold it yet. Okay, and their total value is $1,400,000. Sorry, $1,400,000. And then we have a common stock which has a par value of $1. Par value is the same as face value. And there are 3 million shares authorized, means the company was authorized to sell 3 million shares, but they have sold so far 1,340,000 shares issued and outstanding. Okay. Paid in capital in excess of par for common is $2,900,000. So they sold the share at a face value of 1,340,000, but they also receive extra for $2,900,000. So total paid in capital, the capital that has been paid by the preferred stockholders and common stockholder is $5,640,000. Another way of looking at it is this 280,000 shares when sold and 1,340,000 shares sold, the company brought 5,640,000. And we also have a retained earnings, which is $12 million. So that gives us a total stockholders equity of $17,640,000. Just to revise or fresh up here, that $12 million retained earnings are the profit that the company keep within itself. So they have not been distributed in the name of dividend. And as you know, we have talked about in the past, the dividend always comes from retained earnings. So let's see what is the requirement. It says to identify the different classes of stock that White Comfort Specialists have outstanding. Second question, what is the par value per share of White Comfort preferred stock? And make 2 summary journal entries to record issuance of all White Comfort Specialist stock for cash. Explanations are not required, but we'll give you. And it says no preferred dividends are in the arrears. What arrears means, you are not behind or you do not owe any past dividends, preferred stock dividends for the stockholders. Journalize the declaration of 500,000 dividend as at June 30, 2024, and the payment of dividend on July 20th, 2024. Use separate dividends payable account for preferred and common stock, and explanation is not required. All right, so let's talk about what we have here. So I am going to use a separate piece of paper to give you the answers for these or explanation of these. So the first requirement that we have, it says identify the different classes of stock that Voyage Comfort have outstanding. So we have two classes of stocks. So I'm going to make two classes of stock. One is called the preferred, and the other is called the common. All right. So we have two kinds of stock, a preferred stock and a common stock in this scenario. So that's the answer for your this information. Then the second one, it says, what is the par value per share of Voyage Comfort preferred stock? What is the par value? So we have to calculate of preferred stock. So how are we going to calculate the preferred stock, the par value of the preferred stock? So how many stocks we have here? We have a total value of stock is $1,400,000. So total value of preferred stock, I'm just using PS as a is $1,400,000. And how many stocks authorized and authorizes 625, and 280,000 shares are issued and outstanding. So number, or we can say total number of shares outstanding is equal to 280,000. So par value of preferred stock is equal to total value, which is 1,400,000, divided by total number of preferred stock, which is 280,000. And if we take a calculator and calculate this, 1,400,000 divided by $280,000, 280,000. So that would give us $5 per preferred stock. So each preferred stock equals $5. So that is the answer for question number 2. All right. So now in this question number 3, they talk about make 2 summary journal entries. So we have to make 2 journal entries to record issuance of all the Voyage Comfort Specialist stock for cash. Explanation are not required. So again, so we going to have a journal entry for number 3, and we are, so first we're going to say sale of preferred stock. So how many preferred stock are we selling? Sale of preferred stock. So we are selling we are selling 280,000 preferred stocks. All right. So when we are selling, we're going to receive cash. So debit cash, and we're going to credit preferred stock because the preferred stock is going to the shareholder, and the shareholder is giving the cash to the company. So how many shares we are selling? 280,000 shares, and at a value of $5 per share. So we multiply this by $5. So we have 1,400,000. This is the cash is coming in, and this is how we are going to say that our customer holds, sorry, not the CS, but the PS, preferred stock of 1,400,000. Now we're going to do the second entry, sale of common stock. So we are selling how many shares we have? We are selling 1,340,000 shares. And what is the par value? The par value is $1. All right. So we'll go to the next page. So we're going to say we are receiving debit cash, but we are giving common stock. So what common stock we are getting? So the common stock we are selling again is 1,340,000 at $1. So we have a $1 par value multiplied by 1,340,000. So we have $1,340,000. But you notice that the total that you have sold is the additional paid in capital that you have received is 2,900,000. So we're going to credit another account, and we call that additional paid in capital, which is $2,900,000. All right. So how much cash we have received? The cash we have received is the total of 1,340,000. So we can grab a calculator. 1,340,000 plus 2,900,000. That gives us 4,240,000 to $4,240,000. All right. Now you must be wondering what would be the price of a common stock. So the price of common stock is equal to the total cash that you have received, 4,240,000, divided by the number of shares you have sold is 1,340,000. So let's see what is the price. So $4,240,000 divided by the number of shares is 1,340,000. It gives you, am I making a mistake? Sorry, let's do it again. So 4,240,000 divided by 1,340,000 is equal to 3.164. So let's see 1.64. So what is the difference? So the question is, what is the difference between par value and price? So the par value is equal to the face value, face value, all right, which is $1. So the corporation is saying that my common stock is $1, but the purchaser of this common stock believe that the value of the stock is more than the value of its face value, which is $1. So they are willing to pay $3.16, which is a difference between these two is $3.16 and $1 is $2.16. So for every common stock on this day, every shareholder who is willing to purchase this common stock paying $2.16. So the par value is basically the face value of but the price is what the shareholder is willing to pay. Just like beauty lies in the eye of the beholder, the value of the asset or the value of the bond or the value of the stock lies in the eye of the investor. So if the investor value it at $3.16, they're going to pay you $2.16 extra. So this extra money is called additional paid-in capital. So the common stock has a par value is $1, and the additional paid-in capital is $2.16. So that's why the total value of the stock is $3.16 on this date when they sold that. So that's why the additional paid-in capital, or additional paid-in capital, it says that you are giving us in addition to the par value of the common stock. So that was the idea behind it, even if this is not part of this question, but I just did it for you so you can see that. All right, let's move to the fourth part. The fourth part says no preferred dividends is due, are in arrears, which means no past due preferred stock dividends. All right. Now, why do we call them preferred stock? We call them a preferred stock because they always receive the dividend first. Means, and before the firm can give common stockholders any dividend, they have to pay the preferred stockholders our dividend, and whatever left over in the declared dividend goes to the common stock. All right, holder. Okay. So in this question, they are saying that the company declared. So that's the declaration date on June 30, 2024. So it's called a declaration date. Remember that, you may need it in the exam. Declaration date. They are declaring the dividend, total dividend for both common stock and preferred stock is equal to $500,000. All right, June 30th, and the payment will be, so that will be the payment date. So I would write on July 20th, 2024, which is a payment date. There is one more date that is ex-dividend date that we're not talking about in this question, but we'll do it in future questions. All right, so how much dividend do we have to pay? The preferred stock, in comparison with common stock, received what we call it a fixed dividend. So in this question, when it says preferred stock 7%, which means they are going to receive 7% dividend. So that 7% dividend will be how much? All right, so we have a 200, so we're going to do preferred stock dividend. So we have to calculate how much is it. So we have a 7% and 280,000. So 7% and 280,000, which is equal to their face value, which is $5. So 7% multiplied by $5 multiplied by $280,000. So 280,000 stocks, sorry. So it's 0.07, which is 7%, multiplied by 5, multiplied by 280,000 is equal to 98,000. So the preferred stockholders would receive $98,000 dividend. Okay. So what would be the common stock dividend? The common stock dividend will be equal to, so preferred stock dividend will receive 7% multiplied by $5, which is the face value, 280,000 outstanding, 98,000. So common stock is total dividend minus preferred stock dividend. So the total dividend is 500,000 minus the 98,000. So the common stock people will receive $402,000 dividend. Okay. Now we also have to make a journal entry for these dividends. So on so the journal entry for dividend would be equal to debit retained earnings for $500,000, and we're going to credit dividend payable first for preferred stock, $98,000, and second credit would be dividend payable from common stock, and that would be $402,000, and total is $500,000. This will be done on the day when it was, so it will be dated 6/30/2024, the day dividend declared. And the payment date, which is July 20th, 2024, on that day we say debit credit, dividend payable for preferred stock, 98,000, and debit dividend payable for common stock, 402,000, and we're going to credit cash because you have to send checks for $500,000. All right, so this is how we do that. So this is our declaration date, and this is our payment date. In between there is a date in which we make the list, so there is no journal entry for that. It's basically called a date in which you make a list of all the people who has the ownership by the end of the day. Okay, please let me know if you have any questions. I will be posting these things for you for your review, and again, any questions, please feel free to send me an email. Thank you.